Hey everybody, welcome to Trading Capital's daily analysis video here on June 7th, 2022. Jumping into the S&P 500, it is a pretty remarkable day for the S&P 500, not for the sheer size of the rally on the day. The markets are up, or the S&P is up 0.86%, so not the biggest move, but when you factor in that on an intraday basis, we actually gapped lower and we've recovered and have rallied basically all day long to turn the markets positive. So what initially looked like we were going to be a negative day, the markets have actually rallied and turned positive. So that is definitely an optimistic short-term positive for the markets and for any traders or investors who are long. That being said, we are approaching resistance, but the key thing on an intraday basis is we have had this head and shoulders pattern breakout. This inverse head and shoulders formation breakout. So when we draw it on the charts, you'll see that the inverse head and shoulders is over here. So you have your one shoulder over here. You kind of have your head, and then your other shoulder over here. So you have your inverse head and shoulders that has triggered with your neckline over there. You had your breakout over here. The triggering of this pattern does take you to roughly 420-ish, give or so, take a few cents. So that is some short-term positivity for the markets, and that's why I think the markets are rallying here into the end of the day. A lot of people are seeing that inverse head and shoulders play out. Let me just remove this pattern though to analyze. But now that's an intraday 10-minute pattern that we're observing. When you look at it on an hourly basis, you don't really see that inverse head and shoulders too much either. But when you look at it on the daily chart, what's really interesting is we did comment on yesterday's video that we're still holding this bull flag formation, and you really want to see 6 or 7 days of consolidation. And this is now 1, 2, 3, 4, 5, 6. This is the 6th day of consolidation. So potentially with that intraday inverse head and shoulders pattern, tomorrow may be the day where we break up and push a little bit higher. So 420, the measured move of that inverse head and shoulders, takes you right to the center point of this wide range red bar. There's still that technical gap fill up to the 430 area, but I don't think you hit that right away. I think you're going to have to push up, consolidate, and then make another staircase move up. But that being said, there is still that positive short-term bias for the S&P and the major indices to move up a little bit higher. So that is healthy to see. Obviously, the markets, we've seen reversals happen very quickly. So you have to be ready and nimble for anything. But that being said, the technicals are still pointing towards a little bit more upside in the overall indexes. And we may see a potential short squeeze if this continues to break out of this pattern. We do have this key technical gap up here, which I do think will be filled once we complete the move of this inverse head and shoulders on an intraday basis. But we'll just have to keep monitoring this pattern and see how things progress. If we take a look at the QQQ, again, the QQQ, let me just clean this chart up for us. Let me just take that, check my volume off. QQQ, let me just remove some of these crazy lines, my intraday lines. QQQ, same thing. We are still consolidating bullishly sideways here. You are above the key 25-day short-term moving average, so that is actually healthy to see. Whenever you see this consolidation on a key moving average, that is a bullish short-term sign that you can use to trade to your advantage. And notice how we're close to breaking out again. We did have this longer-term trend line that we were watching. We did say that a retrace to that trend line is very highly probable, and you did hit that retrace on this candle, and you can notice that that trend line has been acting as major resistance. I think the fact that you have been holding the consolidation very tightly underneath this trend line, it does favor a move to break out higher. Now, you will have your next point of resistance at this 317, 318 level. If you get through that, you're likely going to test the gap fill. But that's a big if with yield surging recently and the Fed meeting coming up. We have more energy news tomorrow, EIA data. There's lots We have CPI on Friday, so there's lots of economic data and data points that we have to be aware of that could swing the markets in pretty crazy directions. So we'll just have to monitor that on a daily basis. If we take a look at oil, the WTI chart here, initially it was selling off, but it is so far up 0.5% on the day. The USO is actually a little bit more intriguing because it's broken out past that previous high of 88.15, and now you're looking to continue to surge higher. Now, one thing I do want to point out is we are going to run into this trend line of resistance over here, where you have your pivot in 2019, your pivot in 2020, and we were awfully close to hitting that pivot around the 93 area or so, give or take. So that's going to be your next major level of resistance, which it looks likely to hit. But we'll just have to keep monitoring oil as we go. The EIA data does come out tomorrow, so crude and gas inventories will be released tomorrow. So that's obviously going to be market moving. Whether or not we build, whether or not we have drawdowns, time will tell, but it's certainly going to move the price action of those underlying assets. If we take a look at natural gas hasn't really done much. You're kind of putting in this little bit of a doji. It's not a topping tail, although it is at the, you did make a new high on natural gas. It's not really enough to consider a topping tail because you haven't closed inside of this bar enough, and the wick isn't all that impressive. So realistically, natural gas is kind of flat on the day, so to speak, slightly negative now, but realistically it hasn't done much. I think people are really waiting for those EIA data being released tomorrow at 10:30 before we get the next sudden move. I'm in the camp that we still see a larger than expected number, a building number, since we are in the building season. Anything above 70 billion cubic feet, in my opinion, in terms of a build, will be positive for the markets. I have not looked to see what the market consensus is. Last week we got a 90 billion cubic feet build. But again, as long as we keep that building momentum, the fundamental aspect of us having enough natural gas to supply, I think will be met over the course of the next 20 weeks. So let's just wait and stay tuned for those EIA data tomorrow at 10:30. I'll be watching closely to see what happens. But again, we're still into tons of resistance. You have this trend line. You have your longer term trend lines back here. You have a couple longer ones up here. So there's still tons of resistance up there for energies. I do want to bring to your attention an energy chart, the XLE. So this is the this chart is very fascinating in my opinion. So this is the XLE chart. This is your COVID low, rally up, fade, and then this is the longer term channel that we've been trading in for about a year and a half. So you can notice how we hit a pivot high, sold off, hit the low as support, support again, hit a high, pulled off, hit a high, pulled off, hit a high, and you've blasted through that channel with very significant confidence. So the key question is, how much higher is XLE going to go? Let's go to the monthly chart. This is a very long-term perspective of XLE. So you can see here, going back to 2008, you have a pivot high. Going all the way to 2014, you have another pivot high. And look what you just connected right now to a T. You hit that trend line of resistance perfectly today. The question is will we pull off of that trend line now, which should support the overall thesis that natural gas, oil should see a little bit downside. I don't know how much downside we're going to see, but it should coincide with this potentially putting in a near short-term top, or at least taking a breather and consolidating lower, because these moves have gone completely parabolic. And when you have a longer term trend line like this, especially on an energy ETF like the XLE, naturally it has been a major level of resistance that you have to respect. So time will tell whether or not this yellow trend line will act as resistance again. You are trying to close just slightly above it. Again, my trend line could be off by $1 or $2, but we'll just have to wait and see for a confirmation candle tomorrow and whether or not we do close above that level of resistance. I just think it's very, very fascinating that energy charts are so extended. I mean, even if we look at Valero, yes, it's part of the gasoline distillates, but when you take a look at these charts, these have to be approaching some sort of a near-term exhaustion move. I mean, look at Valero. You've had 1, 2, 3, 4, 5, 6, 7 monthly green candles in a row. Again, long-term resistance trend line going back all the way to 2000. Then you have a 2006, 2007, another pivot here in 2018. And you're blasting through many of these resistance levels. But at some point in time, this chart has gone parabolic. Just like we saw gold go parabolic, we saw Bitcoin go parabolic, we saw the US dollar go parabolic, we saw the Russian ruble go parabolic. When things go parabolic, it's inevitable that they're going to have a mean reversion at some point in time. And when energies typically have a mean reversion, they typically have one of the strongest mean reversions that we witness. And people always forget that when energies fall, they fall exceptionally fast. They fall about 2 times faster than what the S&P and the Nasdaq did in both of the bear markets that led to the crash in '08 and 2000. So energies typically fall extraordinarily quickly because people have been piling into energies. When I say people, institutions have been piling into energies to try to catch that last hoorah rally. But to me, chasing these stocks higher at these levels in a parabolic ascent, something's got to give. And when you look at the risk to reward basis, when a stock is run up this high, the reward, in my opinion, is by shorting it. The risk is not by going long at these levels, at these lofty levels. I mean, you haven't even had a pullback in these names for quite some time. So certainly, I do think these are extended. We are out of the money on Valero, but again, Valero will fall when energies fall and recession a narrative starts to take hold of the mainstream media and the overall stock market, which I do think is coming very, very soon. Let's take a look at ACHR, because that's another one we're shorting. ACHR. So ACHR Aviation, let's just flip to the daily. ACHR Aviation has had some pretty cool price action, a nasty reversal yesterday, followed up by a secondary confirmation reversal candle today. And notice how you're closing back with inside your wedge pattern here. So ultimately this was a failed breakout. So you had your initial impulse move outside of that candle. What you were looking for is a secondary candle close above, which you did not get. You did get a green candle here, but it closed with inside of that initial impulse move breakout. So that is what's called a failed breakout. Now it stands to suggest that you come right back down to the low range of this channel on a failed breakout. And since you actually hit the top end of this parallel channel over here, which was your pivot low, your breakdown point, pivot high, and now your next pivot high, it does suggest that you have a strong probability of coming all the way back down to the low range of this parallel channel due to the fact that you've had a failed breakout, you couldn't hold it, and now the pattern has to swing back all the way to the other side. But when you think about how much ACHR Aviation ran up in 5 days, it was over 55% in 5 days, which is an extraordinary move. But it's good to see it's down today over 7.11%. It is catching a little bit of a bounce into the end of the day. That's just with a strong spider movement. But it's good to see that with the markets positive, ACHR is still down significantly. And I do think there's substantial more downside for ACHR in the days to come. That's it for today. Hope everybody has a wonderful, wonderful evening. And thank you again for being members and subscribers